How's it going all? In this video, we're highlighting the best CDs, Treasury Bills, and savings accounts this week. These won't necessarily be the highest rates out there, but in my opinion, they offer a great balance between customer service and yields. And let's start off with topic number one, and that is a good old savings account. If you like online banks that offer great rates with some physical locations, Capital One is a solid pickup. They're offering 4.15% APY on their 360 performance savings. There's no minimum balance and no monthly fees. I'd say that the Capital One mobile app is very clean and many people are quite happy using it. If you already have credit cards like the Venture X or the Saver One, a Capital One savings account makes a lot of sense. They are a large national bank that doesn't have to incentivize users with constantly changing rates, so if you want a simple, honest yield, Capital One is a very good choice. Now, if you have a bit more cash and want better rates, Wealthfront is a pretty good option. They're offering 4.55% APY with no account fees. It operates like an online checking account with unlimited transfers, making it very liquid. You also get up to $5 million worth of FDIC insurance through their partner banks. And this is an interesting one since Wealthfront doesn't physically hold your cash. Instead, it operates like a cash management account where your money is held with those partner banks. So if Wealthfront goes into trouble, your money should still theoretically be insured. That said, it is a fintech company that gets its money primarily through venture capital and its investment arm. So it's a little bit hard to predict how sustainable this interest rate is and frankly how the company's doing. But they have been among the highest paying platforms for several years now, so Wealthfront could still be worth looking into. But if you want a more established bank, BMO Alto is the new online-only banking platform for BMO Harris. They're offering 4.75% APY with no account fees and unlimited transfers. So the rate is better than Wealthfront while offering very similar services. But while their rates are great, they are only a couple months old and their tech is pretty lacking. So personally, I'd give them a couple more months to kind of figure things out before I'd put a lot of money in. But if you are interested in getting great rates with a big bank, BMO Alto is a good pickup. And finally, as many of you might know, I personally use Marcus by Goldman Sachs. They're offering 4.15% APY with no account fees and same-day transfers of up to $100,000, making it very useful for people with more capital. However, if you use a referral link, you can earn an additional 1% APY for 3 months, and that boosts your interest rate to 5.15% APY. As always, you're welcome to use mine, but if you do have family members who already use Marcus, feel free to use theirs as well to help them earn more money. And next up is money market funds. These are not FDIC insured products, but many of these funds invest in cash and short-term treasuries. They tend to offer higher yields compared to a regular savings account while still being very liquid. Now, if you're with Fidelity, a good option is always SPACs, the Fidelity Government Money Market Fund. The 7-day yield is at 4.75% with an expense ratio of 0.42%. The main draw here is that you're getting a good rate with a $0 minimum. So it's a very solid option for people who want great rates but have a bit less cash to spare. And if you're a customer of Charles Schwab, a similar one is SNSXX, the Schwab US Treasury Money Fund. The 7-day yield is a bit higher at 4.84% APY with an expense ratio of 0.34%. It too has a $0 minimum. And between the two, Schwab is a bit better than Fidelity. However, they're so similar in yields that the differences are very minor. If you have $1,000 or more to spare, you can consider CFG Bank, and special thanks to Craig for highlighting this one. They're offering 5.17% APY on their high-yield money market account. It's a very good rate and about 30 to 40 basis points higher than the previous two. The downside with this bank, though, is that there is a daily transfer limit of $5,000 and a monthly limit of $30,000. So if you are someone who transfers a lot of cash, this might not be the best fit for you. But if you are someone who just wants a good place to put a small vacation fund or an emergency fund, this could work out pretty well. And finally, for my personal pick, it's the Vanguard Treasury Money Market Fund, ticker symbol VUSXX. They do have an investment minimum of $3,000, so it is a pretty big barrier to join. However, the expense ratio is just 9 basis points while offering a compound yield of 5.17% APY. What's unique about this fund is that a good portion is invested directly in US Treasuries, allowing you to save more money since some of the interest is exempt from both state and local taxes. The monthly dividends are great, and they have been consistently rising since 2022. And I'll even say it, I think Vanguard is quite amazing. Next up, if you want to lock up your money for 1 to 3 months to earn better rates, Treasuries are the way to go. The last 4-week T-bill on Treasury Direct was 5.257% APY. That's an amazing rate, and 4 weeks go by really quickly. Now, if you prefer to use a broker, Merrill Edge is pretty much the only good option. The one that I would go for is this T-bill maturing mid-August, offering 5.165% APY. The minimum deposit is just $1,000. I should mention that many viewers here on this channel also use short-term T-bills as a replacement to a savings account, and yeah, it works really well. I do them myself. They're fully backed by the US government, and if you want to learn more about them, definitely check out this video right here. For 3-month treasuries, I'd pick between Merrill Edge and Charles Schwab. On Merrill Edge, there's a T-bill offering 5.334% APY maturing late October. The minimum is just $1,000. There are others out there offering higher rates, but many of them require at least $5,000 or more to get that yield. So for people with less cash, this is probably the most practical one. If you're on Charles Schwab, there is a T-bill offering 5.361% APY maturing mid-October. Now, what I personally love most about Schwab is that most of the minimums are just $1,000. So they're definitely a great pick for both young and smaller investors. Fidelity does offer some solid options like this T-bill at 5.352% APY maturing early November. However, to get that elevated yield, you do need $100,000 to invest. That's a lot of money. So if you only had $1,000 to spare, you would actually get a lower yield at 5.344%. It doesn't sound that bad until you realize that I had to go pretty far down the list just to find a T-bill that works for most people. A lot of the higher yielding treasury bills require 5 or 6 figures to get those rates, so it is one annoying thing about Fidelity. It takes some time to find the right T-bill for you. And as a general rule of thumb, if you're buying treasuries, Merrill Edge and Charles Schwab are much better for smaller investors. Fidelity's fine, but they're a bit more suited for wealthier clients. Moving on, if you're looking at 6 months, Schwab is offering a nice T-bill maturing early January at 5.486% APY. There's several others offering over 5.4%. If you're on Fidelity, there's a good one offering 5.45% APY maturing the same day. For 9-month treasuries, Schwab has a T-bill maturing late March at 5.445%. Plenty of offerings too, around 5.4. Fidelity doesn't really have anything worth looking into. Not kidding, wasn't fun, kind of a waste of time, I'll be honest. Next are 1-year treasuries, and this is where Fidelity and Schwab really shine. On Schwab, you can find many treasury notes offering over 5.4% APY, and you can't really go wrong with any of them. Fidelity has a few at 5.421% APY. It's only about a 5 basis point difference, so it's not a big deal if you're buying treasuries through Fidelity. Now, if you're interested in 1-year CDs on Charles Schwab, JPMorgan Chase is offering a callable 5.55% CD maturing August 2024. The first call date is mid-January. This is a great option if you want elevated interest rates and are comfortable with that call risk. If not, there are 2 banks Valley National and Security Bank, both offering 5.3% APY on non-callable CDs. For 2-year fixed income assets, CDs are generally offering better value than treasuries. One option is a callable CD on Fidelity from Bankwell Bank, offering 5.4% APY. They do have call dates every month starting January 2024, so it does require a bit more work of monitoring, but if you want to earn a good yield with much less work, Morgan Stanley is offering a guaranteed flat 5% yield. And if you prefer credit unions, Summit Credit Union is offering 5.13% APY for 22-month CDs. Very solid rate, but there is a $5,000 balance required. Still, Summit could be a very solid pickup for a lot of players. And if you are a long-term saver, Blackhawk Community Credit Union could be a good option. And special thanks to the Safety Doc for highlighting this one. They're offering 5.4% APY on their 5-year jumbo share certificates. The minimum deposit is $10,000. So if you're saving up for a down payment on a house, this could definitely be worth looking into. But at the end of the day, I'd love to hear about your picks and which banks you've had a great experience with. Have a great rest of your weekend and take care.